This episode is brought to you by Trump Mortgage.
Good day. I'm Sarah Tilson, and this is The Real Deal. Record office building buys and a big brokerage merger topped the news this week in New York City commercial real estate, which continue to remain red hot. On the residential side, the slowing apartment market showed it still has legs with a $30 million deal that set a record for Park Avenue. Commercial brokerage CB Richard Ellis announced that it is buying Trammell Crow Company in a transaction valued at approximately $2.2 billion. The deal is expected to close either in late 2006 or early 2007. CB Richard Ellis will become one of the 500 biggest corporations in the United States through the deal, but it will still have less market share in New York City than rival Cushman & Wakefield. Vornado Realty Trust has agreed to purchase 350 Park Avenue for $542 million. Boasting a 0% vacancy rate, the 30-story, 535,096 square foot office tower will sell for over $1,000 per square foot. And in other Park Avenue news, the recent $30 million sale of a duplex penthouse at 823 Park Avenue may be a record for that avenue. The 7,500 square foot penthouse with 3,000 square feet of terraces sold for about $4,000 a square foot. After 2 years on the sales market, some units at the related company's Astor Place project are now going rental. 5 units available for leasing have been snapped up by renters since hitting the market. Rents have ranged from $95 to $120 per square foot, which Related says are some of the highest rents in the downtown market. A fresh sign of future office tower development in Midtown. Brookfield Financial Properties bought a parcel on 9th Avenue last week for more than $100 million. The firm has owned an adjacent parcel for 20 years and could build up to 4.6 million square feet on the sites, the equivalent of 2 Empire State Buildings. A federal judge ruled that the World Trade Center insurers will owe developer Larry Silverstein only what it would cost to rebuild the Trade Center as it was before September 11th. Therefore, the companies will not have to spend an extra $700 million to make the buildings bigger and better. A Westchester-based developer this week emerged as the likely purchaser of 5 Times Square from Boston Properties. AVR Realty of Yonkers is negotiating a deal to pay $1.3 billion to buy the 39-story, 1.15 million square foot tower that houses Ernst & Young, Giuliani and Partners, and a Red Lobster restaurant. The $1,181 a square foot deal would be the highest price per foot paid for any office building in the United States. Another major lease is brewing at 7 World Trade Center. Banking giant ABN AMRO and landlord Larry Silverstein are reportedly drawing up a term sheet for 160,000 square feet in the Lower Manhattan Tower. If the lease goes through, that would mean 60% of the tower would now be leased. A major shareholder of Rex & Associates Realty says it will vote against the proposed acquisition by rival real estate investment trust SL Green Realty. Investment firm Arnold & S. Bleichroeder Advisors says it's concerned that Rexon directors didn't maximize shareholder value. The shareholder vote is scheduled for November 22nd. Last month's Stuyvesant Town and Cooper Village sale wasn't a rarity for New York City. In fact, in the last few years, investors have been quietly buying larger apartment buildings or portfolios of smaller ones that have a large proportion of rent-regulated units. Recent such buys include Riverton Houses, a 1,250-unit complex in Harlem, and the 1,800-unit Delano Village, also in Harlem. The sheer price tag grabbed the headlines, but the low capitalization rate on the Stuyvesant Town and Cooper Village sale is also catching attention. Though new buyer Tishman Speyer wouldn't reveal the cap rate on the $5.4 billion deal, observers say it could be as low as 2.5%. A nearly 70,000 square foot recreational complex in Flushing Meadows Corona Park is nearing completion. The $60 million complex is the largest of its kind ever built in a city park. The City Council is mulling legislation that would stiffen penalties for violators of certain sections of the building code. The penalties, supported by the Bloomberg administration, could include jail time for the most flagrant violators. Construction work has become one of the most dangerous occupations in New York City. In the last 12 months, 17 workers have died at construction sites around the city, the latest being on November 1st when a worker fell 19 stories from scaffolding in the Flatiron district. In response to this alarming trend, Mayor Bloomberg and the Buildings Department created the Scaffold Worker Safety Task Force, made up of public and private agencies, along with labor groups. The 28-member group will meet over the next few weeks and deliver its recommendations next month. The city will present a plan this week for the future development of the Lower East Side and the East Village. The plan, according to the city, seeks to balance the two neighborhoods' current character with restrictive zoning and to create corridors for increased housing density. Few real estate professionals expect office condos to boom in the city anytime soon, despite steadier development of the hybrids in prime addresses. New York's office condos appeal to smaller companies expecting little employee growth, including nonprofits. Home valuation website Zillow.com has been accused by a coalition of community activist groups of undervaluing the homes in Black and Latino neighborhoods. The coalition also said that real estate and lending industry professionals use Zillow's information to perpetrate fraud. A state Supreme Court judge dismissed a lawsuit filed against Donald Trump by Barbara Corcoran and two Corcoran Group brokers. The suit claimed that Trump owed $1.3 million in commissions from the $1.76 billion sale in 2005 of Riverside South to Extel Development and the Carlyle Group. The Real Estate Board of New York said it would launch a new website by late March, where consumers can access the board's listings that are now only accessible to its broker members. The more than 10,000 listings available daily will come from Brooklyn and Manhattan. The former chairman of Cendant Corporation, the old corporate parent of brokerages like the Corcoran Group and Sotheby's International Realty, was found guilty on Tuesday of conspiracy to commit securities fraud and 2 counts of making false statements. The verdict against Walter Forbes stemmed from a fraud that cost Cendant and its investors more than $3 billion. The iconic Russian Tea Room reopened on Friday. The restaurant and bar on 150 West 57th Street is now owned by developer Gerald Lieblich, who orchestrated a $19 million acquisition and renovation. Thank you for joining us for this edition of the Real Deals Webcast. Please join us next week for the latest real estate news. I'm Sarah Tilson, and this is The Real Deal.